Hi, everybody. Today is July the 10th. This is Bitcoin Live with the Power Law and Minotaur team. It's our usual show where we look at different indicators. We look at global liquidity. We look at um, um, local liquidity inside Bitcoin. We try to figure out, week by week, what to expect about the price, looking at all these, I would say, more scientific indicators, focus more on data-driven information and things that are more reliable in our understanding of Bitcoin action. So today is a big day. We saw a big movement in Bitcoin. Let me share one of my charts so we can take a better look. Okay, so I call this chart the bimodal chart. I explained it many times. You can, and without, instead of me going back to all the details of a chart, you can look at previous episodes. It's a trading view chart. You can actually get the chart. There is in the banner here in the rolling scroll down there. You can see how to join my Discord community. We are developing these indicators. We have about 15 of them right now to get better convergence. I really like this one among others. I usually feature one or two of these indicators per episode, mostly because it shows that Bitcoin has two modes, really. And, this cycle, we repeated this many times, is different from others, right? There are peculiarity that are very particular of this cycle. So we don't expect everything to be exactly the same, but it is different. Um, in the past, we had a very precise division between the behavior below the power law. So the blue line is the general power law. It will look like a straight line. If we were able to take the log of the price and the log of the time, the equation is still calculated like using the log of time instead of just linear time. It's a formula. It's everything you see in this indicator. The beauty of it, it's a formula, right? We are not adapting to the curve. We calculate everything ahead of time. So the white line is what we call the support. Power law. It's really a power law itself. It's you see parallel to the blue line. So basically, it has very similar parameters, and it's about it's 40% below the power law, and it indicates the largest possible deviation that we ever seen in Bitcoin, including COVID. This is COVID. Even during COVID, we reach that point and then we bounce back. And you can see it aligns with all the historical minima that we ever had in the price of Bitcoin. So it's kind of something very unique to Bitcoin. It's one of the most powerful alpha that we can have because we know where the price doesn't go, right? It helps us in understanding many things. The other thing that this chart shows that the behavior that Bitcoin follows when we are above the power law is very different from the behavior below. Mostly when we are below, and we spend close to 2 years when we are in this green region, the deviations are relatively small. We follow basically this black line, this dark green line, and we go sometime below that will be like the minima, sometime above when barely cross the power law, but then we don't stay much there, right? Here we have another example of that. In the other cycles, we didn't even do that. We didn't go above the blue line. In the previous cycles, we did. If you go and look at the history, there is always some event that push upwards. What happened in this cycle was the ETFs. But then, the price wants to correct and go back to this green region. Now, the opposite happens when the bull run starts. Technically, the bull run started in November of last year. I called it ahead of time simply because this is a pattern that we see over and over again, where usually in November we start to see the bull run starting. Um, and and that is associated also with the crossing of the blue line, and usually we stay there. There's been one instance early on in this cycle where we went below, but it didn't last very long. It's almost like uh, it kind of exploded back towards the red region. In this region, we also follow the power law. It's always, in general, the power law is what drives everything. But the deviation from the power law are much larger, and instead of being symmetric, they tend to be on the right side. So they tend to be larger on the positive side, right, than on the negative side. And this is why we see these peaks. So one of the interpretations is that we still follow the power law. It's simply that we tend to have more positive days than negative days. And that creates this skewed distribution of the values, right? Um, and so that is one possible interpretation, the one that is accepted here in this chart. Now, everything started exactly like in the previous cycles when we start, when we crossed the blue line. But then we had this correction that brought us below the power law. Like I say, this never happened, at least never happened for a long period of time. This is why we switch to green, and we stay there for several months. That is usually what happens in a bull run. And then we recover, we went above the power law again, and then recently we are simply oscillating around the power law. This is what we did. Today we went a little bit above the power law, right? You see, it's slightly nothing different from other times, right? That happen the same type of deviation we saw them even in May and so on in previous times. Um, but we expect these deviations anyway if we are in a bull run, because the entire idea of a bull run is when we leave a power law, we become a little bit exponential. We mentioned this 200K as kind of a target. If everything repeated like in the previous cycles, we are already including the fact that we are expecting a decay of these peaks, because it's a deviation that is about 80% of what the power law tell us we will be around 125, 126 by the end of the year. Um, and so we are expecting 80% because if you look at the historical behavior of a peak, they go down in a predictable fashion. So if that going down in a predictable fashion continues, then you will expect 200K. Now, we don't know if that happens. It's still in the realm of possibility, right? I calculated it will take us something on the order of 0.32%, something like that, to actually reach this peak. So Bitcoin needs to start to ramp up. We need more and more days like this to actually reach 200K. Now, if we continue to oscillate along the power law, then by the end of the year, we are still 125, 130, something like that. But I already see people talking about breaking the power law. With one day of bullish behavior, people are already going crazy FOMO. But it's expected. But if anything, we were actually predicting a breaking of the power law, temporary breaking of the power law. That is what Bitcoin has done every single time we had a bubble. Uh, that is the behavior. We break the power law, and then what happens? Well, Bitcoin doesn't like it, and he wants to go back home. This is why we have an overall power law, because basically that year where we go up is cancelled by the year where we go down. But this time we are not even doing that. We are simply oscillating, saying, I don't want to go to vacation, right? I always do the analogies, almost like Bitcoin wants to go to Cancun, get drunk, get some fun with girls or whatever, and then he comes back home. This year he doesn't even want to do that, right? He wants to continue to along with power law. But we will see, right? We will see what happens. I'm very curious to see the liquidity chart and see what they say. But if anything, look, since November of last year, basically, um, of the 24. In fact, actually, we could say all the way here, right? Because even this deviation here, it can be considered a relatively small deviation from the power law. We are following, simply with oscillations almost to a dot. In fact, one of the things that you can do, you can calculate this correlation between the price and this log of time, the log of price and log of time. And that quantity, if you plot it versus time, is going up. Right now, it's on the order of 0.96, almost 0.97. It is absurd. It's completely crazy correlation. And is, if anything, is going up. But to have a bull run, we need to actually break out from that, at least temporarily. We are still on time. I don't know what people get from this bullish behavior if you are not planning to use it somehow. Maybe doing something like buying some put options or something, right? Where you want to take advantage of this volatility because effect is not what you're after. If you're after the long term investment of Bitcoin, to you should not matter if we actually have this bull run. The bull run do bring some new people, because it's something that people pay attention. Maybe people that are on the sidelines, sometimes they see that the price goes crazy and they decide to come in. But many people also leave. I just show these charts. Maybe if we have time, I can show them at the end of the show. That shows the distribution of people, long-term holder versus short-term holders. It turns out that long-term holders sell at the top and then rebuy at the bottom, and the short-term holders, the newcomers, are doing exactly the opposite. That tells a lot about the type of investors they are. But anyway, so this is the analysis based on the power law. Now we can maybe switch to the liquidity charts. But Marcus is a master in discussing these charts.
All right, let's see where the real skin in the game is at here. Let me share my chart, my screen here. All right, we will. Okay, so as always, we are looking at the futures perpetual derivatives because derivatives are leverage, and leverage tends to be the first part of price discovery. Leverage creates bubbles, bubbles pop, and the price follows. And then the arbitrage and the other types of traders that trade the spot catch up to the price, keep the price in line. So what we're looking at here is Bybit is our futures exchange that we look at, use as a choice. They all mirror the same type of action, and all the exchanges are very similar. Okay, so I'm going to add the liquidity, just real simple to any common observer. This is just a standard daily trading view chart. We obviously broke out of this. Some people would call it a bullish flag pattern here. We broke out. Not a big pattern guy, but I believe that the liquidity uh, creates the patterns. The liquidity creates the liquidity creates the price action, which all of the indicators that 80% of retail traders use are indicators are indicating what has happened. They do not indicate what's going to happen. They just measure what has happened and give you an idea of what has already taken place. Somewhat the obvious. So yeah, we broke out. We had a very strong move. This is about 4.5% or more today. That's good. So obviously there's something that got taken here, right? There's some liquidity that got liquidated. So let's have a look at what actually transpired that caused that move. So here we go. So now we can see the what's behind the move, and it's very clear that we have been we have been eyeing this area up here for quite some time. This visually stimulating pocket of concentrated liquidity. It's been there for a long time. You know, for over a month and a half, it's been concentrated here and just continuing to build up. And the market makers have been uh, keeping this tight range here, which is really just building up the liquidity on both sides. That's what they've been doing. That price action's been building liquidity. And today, they have started liquidating more shorts. We were nicking, taking a little bit of a swipe at the longs, but not tremendously so, which is pretty standard in a bull market. But the market has decided collectively to go after the shorts. Went through a period right here of indecision. We were at undecided for over a week, not really knowing what to do. Breakout, come down. There was liquidity here to be taken. Um, and there's a pretty large amount of longs that had me guessing that they would come down here first, um, but it went up first. So here's the next question: Is this is a lot of imbalance right here? When the market consolidates like this, that means they're at balance, right? There's an equilibrium between. They've got the market in a balanced position. The book is fairly balanced. When it's moving, it's it's taking inventory or unloading inventory. It's a very simple process. So here we were in a state of balance, and what happens is we have liquidity here and liquidity long and short, right? Obviously it doesn't take a very trained eye to understand that the short side is imbalance. There's actually more short side liquidity than long side, even though there's a lot of long that's been building at about the same pace. um, right here. It's about the same pace. Well, there's a lot of long, but there's more short. So my point is, okay, if they're going to harvest the short, where do you take it? Because these are forced buyers. So the market is opening with a sell order. You're opening with sell. So you're selling high, and when these get eventually liquidated, these are going to be forced buyers. So they're going to be no, I'm sorry, they're going to be forced sellers, and these are forced buyers. So the market is selling to open here. When these got liquidated, these are sell orders to open to these forced buyers. So they're forced to buy high, and the market makers are selling to them, right? So when we come down here and liquidate these guys down here, these longs eventually, then these longs are going to be forced to sell. So if I can sell high and buy it back low, I win, right? So we didn't know. No one really knows which way. That's probably why we had so much indecision. The bigger players were keeping this market kind of compressed until they determine which way collectively they're going to go, and they've taken the market up. So now we have to determine where does this inventory go? Now you've liquidated it. You've opened sell positions. Where are you going to take it, right? Let's take a look at that. All right. We do know that's obviously you can take it down here and profit. But remember, if a lot of retail and a lot of momentum starts to build, they may be forced, the collective market participants may be forced to liquidate this whole section. It can happen. So we can take the whole thing because there's more liquidity up here and you get a cascading event of liquidations. And the market makers, they can manipulate the market, but they don't control it. So if this thing gets out of hand, it's kind of like a Giovanni's from California, and he knows about forest fires. When this thing catches on fire, grab the wife, grab the kids, because this thing could just ignite, and this we could take this whole block at one time. That's a lot of liquidity, though. If that happens, if they wind up taking this entire uh, pool, which is 3x, 5x, 10x, 25x, if they take this whole thing, then they've got to offload that somewhere because that's going to be a massive amount of short side liquidity, and the only place to take it would either be to distribute it in a new zone. Let's walk through that. So if we wind up taking this thing out, let's just play that. Typically the market, when it takes all the liquidity, it goes up an additional 20%. I'll show you that later. So let's just call that up here at the top, 20%, and then it starts a new range, right? So let's just walk through that. Let's shrink it down a little bit so we can see. So we get up here, then we'll be looking at some type of price action like this where we'll start new pools, right? New pools will get started, long and short up here. So we'll start some new pools, and then we're going to have to the market will have to mitigate that liquidity over here, right? It's got to do something with it. It's not going to sit there. it makes no sense strategically, no sense at all to now the market doesn't make sense all the time to for us, but it makes no sense to continue to s- accumulate short positions because these are forced buyers. So you're selling to open, selling to open, selling to open. Where are you going to close that massive amount? Where is this going to get settled out at? So you pick all this inventory up, you got to bring it back somewhere. And just to
Mhm.
show you how this process works, let's go look at a previous time that happened. Was the last in 2024, the last bull thrust that we had. We did the same thing. They were mitigating it right here, but then it looks like they had to take it all right there. It looked like the whole thing went at one time right here. So what did they do? They carried it right over here, right there. They didn't touch any more shorts. You can see right here they had enough short action, didn't need any more. They brought it over here, and they had to also check the market up to build new pools again. That's the process, right? So so there's two scenarios. If we take all this at one time, then we'll have a similar process more than likely, probably mitigated over here. That puts it, I don't know, October, November, or we can do something a little bit more uniform. We do have a lot. I'm just going to back out a little bit of this so we can see it better. This is just 10x. This is not far. I mean, from where it is now to canceling these guys out, bringing it back down here, that's only 10%. So even if we come back down here, that doesn't hurt anything. It's only a 10% corrective move. So that makes sense too. But we'll just have to see. We have those two scenarios at play. Two scenarios at play. I was betting on that they would come here first and take out these longs who would be forced to sell. So you'd be buying low, right? You'd be buying low, then just move that really nice and sweet up into this area here and sell high because these guys are going to be forced to buy it back from you. So, but they went the opposite direction. It happens. So we're prepared for both.
Yeah,
I
yeah.
like it up like this. So that's kind of the ball game right now as it stands. Let's see what they do with all this.
But it's unlikely it continues for a long time, right? In fact, we start to see some small correction because
Yeah, because
the fuel is gone, right?
yeah, and not only is it gone, that is a tremendous. Let's just go through this little dynamic here. This is 25x fried chicken. They're gone. They went way past those guys. It blew all these guys up. This is just 25x leverage gone.
Yeah,
Okay. Then let's put the 10x. These are a little bit smarter guys. 10x. Okay. Now we can see it starting to overlap. You got 25 and 10. 10's almost gone. Almost gone. It's working on those guys. Here's the 5x guys. A little bit more there, and the 3x is the whole thing, right? But look, my point is, look at how the overlap between 25, 5, 10. It's the same area. It's just a massive amount right there at all these different leverages, and they've already taken that out. What are you going to do with billions of dollars of open interests and short positions? There's a little bit more up here, but at some point you're going to get full. You're going to need to offload that somewhere. So yeah, um, we haven't seen that much concentrated ever in one spot. So what are they going to do with it? They got to do something with it, you know.
yeah.
Well, let's see. Let's see what happens. It's going to be real interesting TV, and you can see there's some new pools already being born that'll keep growing, and they'll probably get those later in the bear market. But they will come for it probably in the bear if we don't come for it anytime soon. Yep, cool stuff.
Very cool.
Hmm.
So, Sebastian, what about our bot, our trading system? Because we have an automated trading system that is actually taking advantage of this movement and this, this liquidity plays and the volatility that is always present in Bitcoin. When people say, "Oh, it's boring," when you have days like this, what we bot did, how did it take advantage of all this?
Yeah, thanks, Giovanni, and welcome anyone new to the show that's just tuning in for the first time. So, I'm the CTO from Minotaur Trading Systems, and we've essentially developed a proprietary algorithm specifically for trading Bitcoin, using the power law fundamentals and the power law principles at the core of how we trade when it comes to the risk management. Now, important to note before I start going in through how the algorithm actually works, there's a number of different things you can do with this algorithm, and it's very, very robust. So, first of all, you can use it simply to just trade USDT settled contracts, meaning you trade against Bitcoin with your USDT and you get paid in USDT profits. Another thing you can do with our system, which is very, very unique and very attractive to Bitcoin maxis and hodlers, is that you can use your Bitcoin as a collateral and essentially trade against the value of your Bitcoin to produce USDT profits, right? So you want to think about the system in the fact that it can do both, and it will be catered depending on what you're actually looking to do out of the market and what your actual bias is. If you're someone that doesn't want to sell your Bitcoin, well, obviously generating profits while holding it is something that's very, very important. And the key here is generating profits in any market condition, right? Regardless of whether the market is moving up, down, or sideways. Now, what the algorithm is built to do above everything else is to have a simplistic approach, but with perfect execution. And really, it's the entry orders that probably have the most alpha over anything. The system is very adapt and robust. So you can create it in a way where it scalps on higher frequency or shorter frequencies, where essentially you can be getting a lot of trades out of the market, or you can set it up in a way where it swings. You can set it up in a way where it's hedged. You can run long, you can run short. So you want to think about it as a tool that can really do it all, depending on how you set it up. So this is a 1 hour time frame at the moment. The reason I want to start on the 1 hour today is because the system can actually run on any time frame as well, right? So we can go all the way up to the daily, all the way down to the 1 minute if you want it to. The reason I like to stay on the higher time frames when I'm explaining the algorithm is it gives you a good idea of what the system is actually doing, right? So if we come back here, we can see how it starts to trade Bitcoin's upwards pressure, right? So let's start back here and get an idea of what the system does. We take a long position here. The market increases in value. Now, the way I've got the algorithm configured is to hold on to the positions until the trend reverses. You can have multiple options of what you do with the take profit. So you can set the take profit at a fixed rate to take profit at your own percentage from the average price. You can also set the take profit up to trail if you wanted it to capture as much of Bitcoin's price as possible. You can also set the take profit to be completely dynamic, meaning it will hold on to positions until trends reverse, which is what I'm showing today. So we take a position down here, market comes all the way up, and then we close our order here. Now, one thing you'll notice straight away, this is the point I was making last week, is when you've got an algorithm that's dynamic, meaning it has its own smarts to analyze market data that's been fed to it, it has the ability to pause and wait to get better entries. And this is very, very important because there's a lot of different, free grid bots and DCA bots out there on the market that you can go and plug in and play with. And they will work for a little bit of time. But the problem with them is they don't really have alpha or edge on the market because what they do is they work basically off inputs. And the inputs you give it means it periodically will buy Bitcoin at different prices. But the problem with that is because it has no intelligence, it doesn't have the ability to actually live read the market data and make decisions based on that. It's completely static, which in the algorithmic world is not something you want. You actually want as many dynamics as possible. So as we can see, we closed our order here and then the market sold off. So this is another important thing. It's not just good at making entries, it's very, very good at exiting the market, closing your bags, and waiting for the amount of time that it needs to. So if everyone can see, we closed our long position here and we did not re-enter the market straight away, right? Because when we close, we're actually closing at a trend reversal. So it's not perfect. It's not guaranteed that the trend is going to reverse, but there's a high probability. So it waits, the trend does reverse, and then rather than picking up a position at 109K, it waited to 105K, which may not sound like a lot, but when it comes to algorithmic execution, even 1% difference can make all the world of difference. It's really significant. Now, where we make this initial entry is here. Now, what happens is rather than the market moving up, right, it moves up a little bit and then it falls. Now, this is an example of the algorithm making a buy and not selling. Now, what happens here is the market actually starts moving against us. Now, for any regular system or for regular retail traders, they will set up a stop loss to make sure they get out of their positions, but they'll eat a loss or they'll start getting emotional when the market moves against them. Because we know the way we built the system is to be able to handle the worst case scenario, and because we use the power law bottom at the back of our minds, when we tune our algorithms, we have no fear in the market moving against us. In fact, it's just a natural part of Bitcoin's daily price action, right? So it's not something that's fearful, right? When Bitcoin falls, it's only ever fearful when you're over leveraging your positions. And as Marcus showed everyone previously on that liquidation heat map, right? The people who go 25x, they go first, right? And this is by design, because when you're over leveraged, you're not giving yourself any breathing room to actually trade. This is why you can continue to lose. And even the people with 3x leverage, they get liquidated as well because they're not using leverage as a way to manage risk and use margin efficiency. They're using leverage as a way to amplify their risk, which is a problem. So they will always get liquidated. And the thing is, you can still use 3x leverage and not be liquidated. The problem with what they're doing is that they're layering in too much capital into their positions and going. So the market moves a little bit and they get taken out. Whereas what we do, since we're so strong on capital efficiency and capital deployment, we make sure if the market moves against us, we simply have to make buys at the right time. So we take a buy here, market moves against us again, we pick up some more. Now we're patient now. We don't make any more buys because the market actually reverses. And as we can see, we go into profit here and we ride all the way up to the next time that the algorithm identifies that it believes there's going to be a trend reversal. So we close our position here again, right? And this is important because we made our first buy at 106K, right? Market moved all the way down to 98, and then we sold at 107, right? So we only sold a smidge above where we made our first buy, but we closed in a big profit. Now, the algorithm decided to wait again and be patient. And it's a rinse and repeat process. So we start picking up more positions here, right? We make a buy here, we make a buy here, we make a buy here, market moves up again, same thing over and over again. Now, the key here is that there's no emotion tied to doing this, right? The algorithm is doing this at a rate that we couldn't even imagine, right? And this isn't a knock on us as humans, but we can't be in front of the screen all day watching this, making the execution orders that we need to have a profitable strategy. This is why the system works so well. It's not that the system is perfect and flawless and never loses. It's that the system can do something we can't do, and that's execute at a highly efficient rate without attaching emotion or directional bias to anything, right? So it's a well-oiled machine, like a conveyor belt that goes round and round and round and round and does the same thing over and over and over again. As we can see here, this is the most recent move. And what we did was we picked up our first position, we picked up our second position, and boom, it's running now, right? So from here, the market's up 7%. We still haven't closed our positions, right? Because the algorithm is currently holding these bags because it has not identified that a trend reversal has happened yet. Now, obviously, the algorithm could have sold at the top here, but it hasn't done that, right? Because it still believes there's room to go. This is very important. Since you have total control over the algorithm, if you didn't want to run it like this and you wanted to cap your take profit, what we'll see happening is since we've given it a specific percentage, as you can see, it's taking profit based on these percentages. So you have total control over how it trades and what it does. This is one of the most important things. But as you can see, when running this system, there's not bias attached to this. And when there's no bias, there's no fear. And when you run it correctly in a safe, intelligent way, you could talk to any of our customers that use this system. We all use leverage, right? All of us use leverage, but none of us get liquidated. And the question is why? How are we able to do that? I mean, how are we able to use more than free pair leverage and still not get liquidated? Well, The point is, it's how we disperse the capital. That's everything. So we don't throw our whole portfolio into the market because Bitcoin may go up. You have to be much smarter than that. You have to be much more intelligent than that. And you have to allow the algorithm to disperse capital slowly and periodically over time, putting itself in the right positions and the right moves before the market moves, right? So it's not predictive at all. We're not using neural networks or machine learning for any AI devs out there. We don't do that. We simply read what's in front of us and we prepare for the worst case scenario. And as we like to say, when you prepare for the worst case scenario and your algorithm's built to handle 60 to 70% sell offs in Bitcoin's price, it's very, very difficult to lose. And the rest really takes care of itself. And as you can see, we're doing this not just going up, but also going down. So as you can see on these huge moves in the market, if we come back, you can have periods where we're buying into large dips, but the overall sum game is that Bitcoin is going to increase over time. So the worst case scenario for us is sometimes holding onto positions, which can happen, but also can be prevented depending on the time frame you're running on. So if we come back to the 15 now, we can see you get much more activity and much more in and out in terms of trading execution, right? And this is the beautiful thing. Having control over all the different functions within the algorithm is something that's very, very unique, right? You're not getting put into a box and you're getting put into a situation where we can give you settings that we have tested and built over a number of years and not just back tested. These are live tested settings in a community of hundreds of traders using our products, right? So this is something we have built out over a number of years, and we're confident with it for that reason, because we're not just using back-tested data. So hopefully this gave everyone a clear explanation today of how the algorithm works and what we do as a business. And of course, always feel free to please book a call with our team. It won't cost you anything. You don't have to buy our product. If you want to hop on a discovery call and just get explained how the system works, we're happy to do that as well, anytime. Did Giovanni drop off?
Yeah. Hey, sounds good there, Sebastian. That's how we do it. That's how we roll. Yes,
Yeah,
sir.
that's right. Yeah, I think it's important, for anyone listening to understand that this is a really hard market to trade. It is not easy, right? I think people assume, Marcus, like that trading Bitcoin is easy, but most traders get liquidated going long as well. Let's think about this for a second.
Right.
Most people get liquidated taking long positions. That says a lot, right? Because the market has been going up for some months now, right? We've had periods of pullbacks, but if most traders fail in a bull market, it says a lot about how difficult it is to trade, because a bull market is really the most advantageous conditions. When you're in a bear market, it's not that easy to, it's even harder, right? So, there's
Right.
something to say about something that can just do the same thing over and over again, right? Through
Right.
execution. It gives you such an edge. It doesn't mean you're bulletproof, but you know,
No.
the average trader, if you gave them $100,000 and you put them in the market, they would probably last about as long as they would playing blackjack in the casino, right?
Yeah.
That's the reality of things, right? Because at the
Right.
end of the day, you can think about the market like a casino, right, Marcus? It's kind of like they
Right.
have a huge, I think they have a bigger edge than playing blackjack, to be honest.
Right. I mean, the problem is if you're trying to be a discretionary trader, you're trading against computerized systems. That's what dominates like 90% of the volume is discretionary. I mean, automated systems, computer systems. And one of the things that gets traders in trouble is they're trading with their eyes. It is completely designed to trigger your emotions or give you false readings or make it look like if you're bullish in sentiment, it's going to look bullish. If you're bearish, it looks bearish. It is designed to pull you in. That is what it is built to do. That's how it turns you into liquidity. Is it pulls you in to make bets, long, short. It's just like a casino, just like you said. You can make a long bet or a short bet, and the majority of those are wrong, even up to 3x. You made that very clear. All the way to 3x, it's just a losing game. And the way you mitigate that is, if it's a world run by computers and robots and systems, then it'd be a good idea for you to hotwire your own system to go against those systems, right? um, what you showcased with the algorithm is, it is not magic. I want to be very clear here, and I know you're going to agree with this, Sebastian, because
Mhm.
we are on the same page. We are not doing anything that is magical or black box or something that is incredibly complex with leverage positions and derivative instruments that we don't even can't even spell. We're not doing any of that stuff. It is so incredibly simple. A 6-year-old could follow this strategy. What makes the algorithm have its value is it does the simple flawlessly. It doesn't sleep, it doesn't eat, it doesn't have emotion, it doesn't second guess, it uses math, it uses technicals, it is always working. It's just like the little
Mhm.
turtle. It just continues to just crank out returns, close sensible trades over and over again. That's the magic, is just the execution of it. So, yep,
Yeah,
you
that's
said
right.
you said it
And
good.
you can get stuck in the weeds, right? You can really
Yeah,
get stuck in the weeds. I mean,
yeah,
I think anyone that's watching this that's a trader, trust me, like we all started in the same place, right? I can assure you
yeah,
this. I mean, we've all gone through Trading View, and there's some great indicators out there, but we all start in the same way, right? Understanding lower high highs, lower lows, market
yeah,
cipher, RSIs, MACDs, right? All these
yeah.
different things, and
In,
then you apply
in,
it, and then you sit in front of the
indicators,
computer all day.
indicators,
Yeah,
indicators just indicate has happened. That's all they do.
that's what's
They
so
just,
cool about the liquidity, right? And I think
yeah,
sometimes markets does such a good job of explaining the liquidity, but what I think another important thing to understand about when markets is showing this liquidity, he's not showing you what's going to happen. He's showing you what can happen based on
right,
different play out scenarios in the market. And as he's shown, the market is still going to do what it's going to do, right? It's its own beast. There's no controlling it. But the liquidity shows you, and what's so powerful about it is it's open interest. So it's not showing you
it's
what's
not.
already happened. It's showing you what could happen, which is
It,
that is completely different to a traditional
right,
indicator on trading view, right?
yeah. That's why I don't use them. Because they're
Yeah.
only going to tell you what's. It's kind of like, I don't need something to tell me that I'm screwed. You're in bad shape. Well, I kind of know that. So yeah, I want something that's going to be legitimate, that I can depend on. You can depend on the price action. You can see that, and you can depend on where traders are accumulating their positions. You can pretty much depend on those two certainties, that the market is going to go where large amounts of liquidity exists. It just makes sense. The
Yes.
bigger the bigger positions can't move without it. So it's going where those orders are at, and it also tends to go where the largest amount of people are going to get liquidated. And it's just simple.
Yes.
Yeah.
Yeah,
So
it's actually when you start reading the liquidity charts, understanding how to see them, you start to see funny patterns back from when you were a retail
yeah,
trader. Like, did you ever have
yeah,
a stop loss set and then your stop loss got hit and then it
right,
went to your take profit target? There's a
right.
reason that's happening, right? Because all the stop losses got taken, short
Yeah, you
squeeze
were in
sends the
there.
price back the other way. And you'd be
Yeah,
sitting there as a retail trader going, oh my gosh, like this trade was perfect, but my stop loss got triggered, and then it goes straight to your take profit. So this is happening by design, right? It's not
yeah.
random that price is doing that.
And you hear retailers say, "Oh, they're targeting my stop losses. They're targeting me."
Yeah, yeah, yeah.
They're 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 no more targeting you than if you walked out in front of a busy street and got hit by a bus. The bus is not targeting you. You just jumped in front of it. So yeah, technically you could say the bus was targeting you because it hit you, but no, it's
Yeah,
because you
yeah.
stepped in front of it. Yeah,
And don't ever forget that. Like once you place these things on the order book, they're there. They're
you're
visible,
there.
right? So like you're there and they're not targeting you. They're targeting everyone because everyone's putting it in the same spot.
Yeah, I heard people ask me, well, okay, I can why are those positions, why they're not moving out of the way? Why don't they just close them down or move them? Well, what happens is the minute you take that trade, and a lot of people can understand this, when you take a trade, you're almost immediately going drawdown. You're stuck. You're not
Yes.
going anywhere. When you're in drawdown, it's like, do you want to lose a little bit, or do you want to lose a little bit more, or a little bit more? You just get stuck because it has you locked in drawdown. There's nothing much you can do at that point. You're stuck.
That's
It's
right.
monster flame. All right, we got some questions. Y'all want to take a look at some of those? I guess. Oh yeah, Alex.
Yes.
Yeah, appreciate it, Alex. Happy to do it. I enjoy kind of lifting the veil and my motivation is I like to show it in its most basic form. If something can't make basic sense, then you probably shouldn't be doing it. It has to be simple because these banks and these institutions and these big players, they're not doing anything incredibly complicated. It's actually simple. It's
Yeah.
just we make it more complicated than it needs to be. So yeah.
Yeah. We make it simple for them, right? We
Yeah,
make it easy
we
for them. That's,
well, we as discretionaries, we call ourselves discretionaries. We make it harder than it actually is, and by making it complicated, we make it easy for them to feed on us because we're doing all this crazy stuff that they don't do. They don't do any of this kind of stuff. So we do it. We are our own worst enemy. All right, what do you got here? Let's see. I guess I'll go from the top to the bottom. It says, okay, so how do you make money every time? Simple. Yeah,
I
I
can
should
answer that
pre-read
if
it.
you want.
Yeah, here it is.
uh,
I'm gonna kind of highlight. Here's how you make money simply, because I'm gonna break our formula down simply because it's built on simple stuff, right? We pick Bitcoin. Why? Because it is the foundational asset of choice. Right now, it is the new kid on the block. It is a bankable collateral, it's institutional grade, and it's brand new. It's only about 2 trillion, $2.5 trillion. So it has plenty of room to run. It's not efficient like some of those legacy assets. And it's incredibly liquid. We can get in and out, whether it's $1,000 position or $1 million position. Check mark number one, Bitcoin, and it typically goes up, right? So we have the power law that kind of tells us how it's going up. So those are the two primary ingredients right there for success. And the third one is we have a machine, right, that takes advantage of the movements and makes money off those movements. That's what the algorithm is doing. It's trading within that cycle. Done. Mic drop, game over. See you tomorrow. See you next week. That's it. 1, 2, 3. Simple as that. So what's the
yeah.
next one there? You want to take one, Sebastian, there? Read one of them off?
Yeah, sure. So Dan's saying, I don't understand, why do we have to go below 98K to grab liquidity? Lots of liquidity sub 74K that got left behind. Cheers. So yeah, that's a good question.
Good
And it's
point.
not
Yeah.
about why do we have to,
You
right?
don't have to.
It's not it's not have to, right? It's more or less like where it is building. And
Yeah.
just because all the liquidity like was not taken doesn't mean it can't essentially come back down to take it. We've
Right.
seen that previously. But and there is sometimes points where it is more obvious than in other times that the
Yeah.
liquidity is going to be taken. Simply, sometimes it can happen in inflection. So you have a couple weeks in a row that give you an indication, but also
Right.
sometimes there can be such a large buildup that happens through this consolidation periods that it's so ripe for the taking that it can be parabolic, right? And
Right.
this is the point that Marcus was making earlier. It's showing the heat maps to give you an idea of what could happen on both sides of the market. And why
Right.
Marcus does that is he's very careful to not be completely directional biased that it's just going to keep going up. He's trying to show you, now, even though it has been doing that, right, which we're all excited about, it keeps going up. He's trying to show you of what can happen when it goes down, because a lot of, I guess, excitement and mania and FOMO happens during these times, that it always happens when Bitcoin's running up. It's never happens when Bitcoin's going down, right? So the reason Marcus shows you this is that he wants to give you an idea of what can happen if it goes down, because it will, right? And it's important to get an understanding of both sides of the market. This is how we get trapped so
Right.
easily into Bitcoin's price action, is on days like today, because everyone and their dog and your grandma and your
Start
aunties
jumping
are
on.
going, how do I buy Bitcoin? Right? I need to get in. I need to buy Bitcoin.
Wrong
And
time.
this is by design, right? So, you know, coming back to Dan and to the person earlier who asked, how do you make money every time simple, right? You have to start putting yourself in a mindset of understanding that, you know, Bitcoin is probably one of the best investments you can make, period, right? And if you are someone who's starting with a smaller amount of capital, you need to ask yourself, the simple question of, if you want to truly create wealth or over time have long-term success, you need to be buying this asset, right? It's very simple. You should be buying the asset. And if you don't have enough money to be running an algorithmic trading system, the only way to work your way up is to invest that into an asset that's going up over time. Now, I'll ask anyone the simple question, if you could buy a house for $100,000, would you buy a house for $100,000 in the right conditions? You would, every single time, right? So a lot of people are viewing this as something that is overpriced, but in reality, simply buying it, even dollar cost averaging into it manually, can give you such a large edge. Where you go wrong is you place huge futures positions with huge leverage, trying to get rich really quickly. And time again, you'll see that it doesn't work because nothing like that exists, right? This is the problem with this market, is that people see people get rich overnight over a dog coin and think that they're going to be able to replicate that. But you're better off buying a lottery ticket, really, at the end of the day. So,
Let me
be
let
willing
me
to.
let
Yeah,
me
you go,
add to
Marcus.
Dan. Let me add to Dan really quick too. Add to your point there. No, we don't have to go to 98. I like to have an objective approach where we have a bullish case scenario and a bearish case. Um, it is simple math. There was a lot of shorts that got liquidated. That's obvious. We have the evidence of that. When those shorts got liquidated, they were forced to buy. So somebody sold on the other side. I'm talking billions of dollars, billions upon billions. So those positions are short to open. They will have to be closed at some point. Now, if the market doesn't go back to 98, which none of us wants that to happen, 96, 98, where that pool of where those pools of longs are waiting, those are already locked in also. Well, there's a high probability, because we already said, I said earlier that the California forest fire could take off, uh, and just burn that whole pool. When we're in that phase where we're almost so far into it to where it's a high probability it's going to take the whole pool, which means it's going to run potentially to 130, 140, which is great, right? But even if it does that scenario, remember, we do have the power law that measures these things fairly accurately, that we will reach the top of the cycle. And just don't forget that 96K or that 100K range. The market will come back and pay that bill is going to be collected when the market comes back, either on the bear market side or the probably in the bear market. We're coming back to that level that will be settled. So just keep that in mind, now or later.
Yeah.
Yep.
And Marcus's point as well is, you know, he wants healthy price action. This is what a lot of
Yeah.
people don't realize as well. Pure mania and parabolic upwards God candles aren't healthy. That's not actually good for the market, right? And usually when that
Come back.
happens, it will come back maybe twice as fast, right? It will boomerang, right? So it's important to understand that there is an element of, you want price to actually move in the correct way also. That's important too.
Great point, Sebastian. For example, just running a business, if I've got $1 billion of sell to open shorts on my book, I need to close that. If I've got those shorts were liquidated around 115 today. Well, if we push it to 140, I didn't get off of any of them. I'm still holding them. So I'm gonna have to wait, but eventually I'm gonna be looking to get off those shorts. So that's what you were talking about, healthy price action. You go up 10%, you correct 5%, you go up 15, you correct 10. That allows the market, the big participants, to get on and off, and everybody to take profit, rebalance, and that's how you have a healthy ascension to 200, 175, 180 without having to come all the way back down. That's the reason. You don't want that. You want a nice stair step motion to the top where we can hang out there for a while.
Exactly.
Yeah,
As
so much
yeah,
volatility.
as Bitcoin's
Mhm.
price increases, we should see more of that, because the parabolic moves actually become harder and the volatility dwindles over time due to the market capitalization. Like, it can't move like it used to, right? There's a
No,
lot
it gets
in
harder to
there
do.
now.
Yeah,
It
a
gets
lot in
harder
there.
and harder, right? And then
Mhm.
eventually, I mean, if it keeps going, you can see what's happening with gold now, right? It's got 10 times the market cap of Bitcoin. 20 trillion or so, and on gold, a 1% move is exciting, right?
There's a lot there now. It gets harder.
Be careful what you ask for, because some people don't like the volatility in Bitcoin.
With gold now, right? It's got 10 times the market cap of Bitcoin. 20 trillion or so, and on gold, a 1% move is exciting, right?
There's a lot there now. It gets harder.
Be careful what you ask for, because some people don't like the volatility in Bitcoin.
With gold now, right? It's got 10 times the market cap of Bitcoin. 20 trillion or so, and on gold, a 1% move is exciting, right?
There's a lot there now. It gets harder.
Be careful what you ask for, because some people don't like the volatility in Bitcoin.
With gold now, right? It's got 10 times the market cap of Bitcoin. 20 trillion or so, and on gold, a 1% move is exciting, right?
There's a lot there now. It gets harder.
Be careful what you ask for, because some people don't like the volatility in Bitcoin.
With gold now, right? It's got 10 times the market cap of Bitcoin.
Guys, if you can hear me, I have some problem with the headphones. So we can close the shot anytime. You can take over and decide when to end the show. Guys, if you can hear me, I have some problem with. So we can close the shot anytime. You can take over. Okay. Guys, I have some problem with my. Okay, let me close this. I cannot hear you for some reason. I was trying to.
I'm back now. It stopped.
Sebastian, we cannot see you.
Yeah,
I think we covered a lot of topics. I don't know. It's something with the Restream. It doesn't allow me to use these headphones that I was using before.
Yeah.
And
Can you guys
if
hear
I
me?
listen through my phone, it will be like an echo.
Those
It started
headphones,
repeating.
those headphones are magical, man. I was like,
talk. So
hey.
Anyway, I think we covered a lot of topics. We went deep in understanding the recent action. Hopefully, we don't have this technical problem next time. Let's close here. Unless Marcos or Sebastian, you want to make some concluding remarks.
Yeah, I mean,
I think
next week is going to be very exciting, because
Marcos, what are your concluding remarks?
No, I was saying next week will be very exciting, because there'll be more information. We'll know more about this move next week. So tune in, see what we got. Yep.
Sebastian?
Hi, Giovanni. Yeah. So thanks everyone for joining. Sorry for the technical issues at the end there. And our algorithms
Sebastian,
still
we cannot hear you if you're saying something.
Oh,
I can hear you.
Can you hear me? Yeah. I think it's Giovanni's headphones, but we'll continue to see what happens next week. We'll let it play out. Our algorithm's still holding onto the positions, and we'll see how far the market runs. It's exciting. So let's see what happens.
Yep.
Okay. Let me turn off my phone just a second. All right. Yeah, okay, guys. Thank you so much. And we will see you next week.